Hello friends, in this video we will understand about order to cash journal entries. In my previous video of order to cash cycle, I have explained each and every steps involved in the process with the logical analysis. You can refer to that for the detailed understanding on order to cash cycle. Now in this video, before starting order to cash journal entry, I just wanted to give you background to understand what is O2C cycle so that it becomes easy on you to understand what is the journal entries will be involved in this O2C cycle. So in order to cash cycle, there involved 7 steps, and these are the 7 steps comprising of 4 different departments. Now first department is the order management, where you have first step called enter and booking of an order. So I have combined these two together. And then comes the warehousing management. In warehousing management, you have step called pickup and release, and the third step is shipping execution, means delivery of goods to the customer. And after warehouse management, there comes the receivables and collection department. In this, after delivering goods to the customer, we make a fourth step called invoicing. We book an invoice against that customer and we book the sales revenue. After booking this sales revenue invoice, we will recognize cost of goods sold. That becomes my sixth step, right? After this sixth step, on the due date, customer will pay us the amount and we will collect the amount from the customer. That's called receipt. We will make a receipt journal entry. That's my sixth step. After making receipt from the customer, we will do the reconciliation in cash management. Means we will reconcile this receipt in my books of accounts with the bank statement, and that's called reconciliation in cash management, and that becomes my seventh step in cash management department. So there are 4 different departments involved, and in these 4 different departments there are 7 steps, and we will understand journal entry for each of these steps, right? Also, you need to know one thing, that we must journal entry only for business activities. And now what is business activity? That I have explained in my previous video of P2P accounting cycle, that's called procure to pay accounting journal entries. You can refer to that video to understand what is business activity, right now you just remember that we pass journal entry for those transactions for which we have business activity. So with that understanding, let's begin. So the very first step involved in the O2C cycle is entering and booking of an order. Now here there will not be any journal entry because this is just an internal process of an organization. There won't be any activity. Now comes to the second step in warehouse management, that's called pickup and release. Now in pickup and release, what we do, we pick up the goods from the warehouse and we keep these goods in the staging area. Now what is staging area? Now in big warehouses, there is a one dedicated stage area where goods are kept ready so that delivery team or the logistic teams come, they pick up the goods and they deliver it to the customer. So that's my staging area. So for this, there will be journal entry called staging clearing account debit to inventory or finished goods accounts credit, right? So this will be the journal entry for pickup and release, my second step. Then comes the third step called shipping execution. Now at this stage, my logistic team will come and they will pick up the goods from the staging area and they will deliver these goods to the customer. And for this, the journal entry will be deferred cost of goods sold account debit to staging clearing account credit. So this will be the journal entry for shipping execution. After delivering goods to the customer, now the ownership of goods has been transferred to the customer. Once the goods are delivered, now we can recognize the journal entry for invoicing, means I can book my sales revenue, right? So that becomes my fourth step in the receivables. So for that, journal entry will be receivables or debtors account debit to sales or revenue account credit, right? So I have booked my sales, I have booked my revenue. After booking revenue, now we can also pass the journal entry for recognition of cost of goods sold, means the cost which we have incurred for this goods which we have manufactured or we have bought, we need to pass cost of goods sold journal entry, right? So for that, there will be a journal entry called cost of goods sold account debit to deferred cost of goods sold credit. So this will be my fifth step. Now once the recognition of cost of goods sold is done, then I can make a journal entry for receipt. Now receipting journal entry will be done when we receive amount from the customer on due date. So on due date, customer will pay us amount which was due for the invoice, and for that we will pass journal entry called cash clearing account debit to receivables account credit, right? So this was the journal entry for receipt, my sixth step. And at the last will come the reconciliation. So what we will do, we will reconcile the amount received from the customer from our books of accounts with bank statement. So therefore the journal entry will be cash account debit to cash clearing account credit, means the cash has been deposited in the bank account and we are now reconciling with the books of accounts, right? So these are the 7 logical steps involved in this order to cash cycle, and these were the journal entries. Now let's understand quick logic and also some facts. As you can see, overall the journal entries will be only 2. How? Let me explain. So if you can see in my order management and in warehouse management, I have journal entry for pickup and release, which is stage clearing account debit to inventory or finished goods, and my stage clearing account will get knocked off when I pass the journal entry for shipping execution. If you can see, my journal entry for shipping execution is deferred cost of goods sold account debit to stage clearing account. So my stage clearing accounts gets knocked off. And after this, when I do the recognition of cost of goods sold, at that time what I did, cost of goods sold accounts debit to deferred cost of goods sold credit. And as you can see, the deferred cost of goods sold account was debited at the time of shipping execution gets credited at the time of recognition of COGS. So that gets knocked off, right? Coming back to the receivables collection and cash management, my journal entry were receivables account debit to revenue account or sales account. And when I do the receipting journal entry for amount received from the customer, at that time I did cash clearing account debit to receivables account. So receivable accounts debit credit knocked off. And in cash management, when I do the reconciliation, my cash clearing account which was debited at the time of receipt was credited at the time of reconciliation. So that also got knocked off. So my ultimate journal entry became cost of goods sold account debit to inventory or finished goods accounts credit. And on the receivable side, my journal entry became cash or bank account debit to sales or revenue account credit, right? And these are also very logical one. If you see the golden rules of accounting, my inventories gets credited because it's a real account, and my sales accounts gets credited because it's a nominal account. So that logic you can also think of, and this is as per that logic. So these are my 2 ultimate journal entries. Now also one more thing, this is an ERP system. An ERP system is the integrated accounting system, right? Means my cost accounting and my journal ledger accounting are integrated. So what this ERP does, it captures each and every activities journal entries for the control purpose, for the internal control purpose. So that's why if you can see at each and every step, starting from pickup and release till the cash reconciliation, there are control accounts which gets knocked off. So whatever the debit, whatever the credit gets knocked off, they are all my control accounts. And that's why we see that ERP system is also one of the best system for the control purpose, internal control purpose, right? So if any of the step is missing, that means your journal entry is missing. And if there are no any 7 steps involved in this O2C cycle, that means there is a lag in your process which needs to be improved, right? And it can be tracked easily if there is any lag, if there is a missing journal entry. So that's how every organization follows this order to cash cycle with the logical steps. I hope you got good understanding or clarity on this order to cash journal entries. If you have any questions, you can comment. And that's it for the day. Thank you so much for watching this video, and take care.